I just noticed I didn't hit the record button. Let me just quickly do that. Alrighty, welcome everyone to today's webinar at Admiral Markets, Stages of a Developing Trader, today at 24th of July. My name is Chris Forsick.
My name is Nenad Kerkez. Hello everyone.
Good evening everyone. We're going to take a look at all these stages of a developing trader. I think it's going to be a great webinar for you, and you're going to see the differences of all the various types of traders out there. And I think just recognizing and seeing that difference is going to be very valuable. So glad that you could make it today with us. Please, after the webinar, take a look at, as always, I recommend to take a look at the Admiral Markets website, where you can see great info regarding technical analysis, but also information regarding the spread. So if you're in need of a good broker, and I think everyone is, take a look at Admiral Markets. And as always, the risk disclaimer explaining that global financial markets is high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. This video and webinar is for educational purposes only. So we thank you for your attention on that. So today we're going to take a look at, as I said, what stages a trader goes through. So what stages are there in general? What kind of differences, how can we define it? What kind of characteristics does each of these phases have? So we'll be starting with that. Before we do that, we're going to take a quick look at our agenda, and these are basically sums it up, right? Roughly.
Yep, roughly it sums it up. So we have basically 5 stages in developing a trader mentality. So that is beginner, rookie or novice trader, developing trader, part-time trader, or also known as determined or advanced trader. Then we come in our next stage consistent trader, and after that the full scale, full developed trader called expert or mentor. Basically consistent trader and expert and mentor are only full-time traders, but still there are some differences that differs each of those classes.
Yep.
So that is what I think that we are all going through these stages. So you will find yourself probably in in a stage.
Exactly. It's just a process, like everything, right? It's an art. It's any sport, anything that requires time to master. We will see this development, even if it's a piano, learning to play the piano, or if it's playing to play baseball or football. We will see this basically in any branch, indeed.
Yeah, exactly, and we always have to consider that market is constantly changing. There are good days, there are bad days, but after all, we need to take care of that, because we need to stay in this business as long as we can. So that is the main purpose of being a trader. Being a trader doesn't mean always that you will make money, but it means that you should keep your money safe. And as I always say, because without money you cannot trade. So as in every business you need money to run business. So same is here, you need money to run this business. And basically I know many beginners and rookie traders who have lost their accounts even though they have money, because they are rich, they are born rich, or their parents are rich, or maybe they worked and then they thought that they could work full-time like Forex trader, but they couldn't. And after 1 or 2 months they have lost their money, they have lost everything. So this is a very, very dangerous business, but as you know, we are always showing you how to take care of different trading types, different mentalities, different marketing conditions, everything that we should know of, we pass that knowledge to you. So I think that most of us really has undergone through all of these stages. Sooner or later you all will. At least most of you are probably a beginner or developing trader. Maybe some of you are part-time trader. Not many of you are consistent and full-time. To be consistent and full-time trader requires a lot of work, a lot of screening time, we will show you how we differ those trading, how can I say, classes or trading jobs, because those are all different mentalities, and by practicing, by trading, by experience, by gaining experience, you will advance in your levels. So as always, this is a job, this is not a game. I really hate to see when some traders say, I will play this and I will play this, I will play that. So that is not correct. We are not playing here. We are traders, we trade, and we never take any positions like we consider it that we are playing. So that is a wrong sentence, telling someone that you are playing an order, or maybe I will play that setup. No, you will trade the setup, you won't play the setup. So Chris,
Yes,
do you have
absolutely.
anything to add on, or we can start with our
Yes,
stages?
let's go with the stages indeed. No, absolutely true. We're here for the big long-term professional side of the business, and that's what we want to explain. And I wanted to just dive into actually these categories here that you nicely mentioned. And I had prepared this way of looking at it. It's Abraham Maslow's 4 stages of learning, and they really tie into nicely what you had here too. Basically, Maslow used this matrix of unconsciousness versus consciousness and competence versus incompetence, and it's a common way of looking at development of skills and skill sets. Basically, this the level 1 is an unconscious incompetence. That's basically you're not aware of the things that you should be aware of and should know. So it's kind of in the darkness, trying to succeed without the bearings and the fundamentals and the knowledge and all the rest that you need to succeed. So you're just walking in the blind, and you're eventually going to hit the wall. 2 is the conscious incompetence. That's where you at least arrive to the stage that you know about what you don't know and what you should start to know about to be able to succeed. Level 3 is the conscious competence, where you know what you should know. Everything is clear. Everything to succeed, what you need to succeed, is available, is at your disposal, and you can implement. Level 4 is unconscious competence. That's when the skill set really is where you drive it home, because it's becoming like a natural item for you. It's becoming like a second nature. You don't have to think about how to implement it. It's just almost like automatic. If you were to, for example, maybe an example that's often used anyhow is, for example, driving. At the beginning, it takes a lot of attention and skill and concentration to drive properly. Eventually, it becomes automatic, and you're actually unconscious competent if you have enough experience at level 4. Then to become level 4 in driving. That would hold true to eventually or it will get close to that with trading. Level 5 is sometimes added, is a mastery level. That ties into what Tarantula also was saying here, the expert mentor, basically. So that's some extra info there. Now both of us actually prepared our views of how we look at these stages, but they tie in a way together. So we're going to go stage by stage and give both our views here. First of all, my view on the stages number 1 regarding the beginner. Basically here you see often the observed behavior of where you see the unconscious incompetence. That could be visible in various ways. It depends on the type of person. Some might do a few of these things. Some might do all of these things. Other people might take massive risks. The other might be searching for the Holy Grail. Not all of us will make these mistakes. Some of us will make a few. Some of us will make others. Okay, it depends on our trading psychology. But in general, you would see these 7 things among others. For example, taking massive risk, taking 50% capital on one trade, or all of your capital on one trade. I don't know, crazy stuff probably, just on one risk, and just on the hunch of a trade, for example. Or often, just skipping all the learning steps, not properly preparing for what trading really is, not realizing that, thinking it's an easy, quick get-rich scheme. All right, looking for hot tips, looking for the holy grail, over combining indicators till they're, till you drop from exhaustion when the sun is rising. Not really having sometimes maybe fear, because there is nothing to fear. There's limited knowledge, so the fear factor is maybe not there. Maybe greedy for a lot of profits though, right? Maybe inexperienced in the technicals, of course, right? Sometimes actually the beginner could be very lucky if the person catches a trend and could hit a massive home run, made a lot of money at the beginning. Sometimes it happens, but lose it all when the trend stops and totally doesn't understand what happened. Right? So these are just examples of things that could happen when you just start out, and it depends which one you bump into. Maybe all of us will bump into some of them, but it depends your personality, which one you probably bump into. Now, what of course the desired behavior is for the stage 1 beginner is to take the time to learn the basics. All right, that is often overlooked. We need screen time. We need to observe. We need to learn. We need to read. We need to watch webinars. We need to demo trade. We need to paper trade. We need to do a lot of stuff, but definitely not over-risking our live money. All right, we need to understand how the charts work, the indicators, the markets, what influences what. All right, we need to also, another important thing is we need to really understand and realize and try to look for the mistakes of others, because that will, pay us good dividend. If we realize what others have bumped into when they were developing, trying to reach the next stage, with that knowledge, you're already a step ahead of the game, because you already realize some of the paths that others have walked through and that have led to a dead end. So it's very valuable to look for that. And treat trading as a business. Tarantula already talked about it, and we talked about it last time as well, so I won't emphasize it by talking about it too long, but it is very important. And just the fact that if you've ever had a business before you traded, and if you ever had a perfectly successful business, I guess, but if you ever just tried to start a business already, you know how many facets and how many things are connected to it, how many processes are connected to it. If you've been employee for your life for 50 years, it might be difficult to switch gears and go into that own business type of mode. It's not easy. I'm not saying it's not possible. It's not impossible. It's just that if you have that business mentality, it would help. Let me say it this way. And especially if you treat your business as trading as a business, it does good things. All right. So I'll move on now to beginner trader here. What Tarantula has to add?
Yeah, beginner trader. Mostly, Chris, you're right, and I can agree with you completely. And there are also some stages that beginner traders pass, and I have made some of those mentality problems and those mentality stages that traders are going through. So, well, beginner trader is a trader who usually knows a few basic things about Forex, or maybe doesn't know nothing, just maybe what Forex is and the word Forex, like foreign exchange or office or something like that. And then he makes his debut, I can say, in Forex by asking his friend about it, and his friend is telling him that in Forex you can make a lot of money and so on. And then he goes to internet and try to Google about Forex trading, and of course on Google and on internet or over the internet all are winners, no one loses. So Well, traders make millions sitting close to the computer, and beginner traders thinks that he will make millions sitting close to his computer or his trading station. He is very optimistic at the beginning, full of excitement and overconfident. And he did maybe some of his trades, and of course beginner's luck. You know what beginner's luck is. You probably read about Paulo Coelho, a book called Alchemist, and that is a perfect example of that beginner's luck. So he probably thinks that he will make money constantly and that he will never lose that money, and he starts to play with money. Well, after few initial successes, he thinks he can make money every day. And then what happens those black swan days when traders usually lose money, and well, in the matter of minutes, the beginner trader has lost his account. Well, almost lost his account. He almost loses the account, and he tries to revenge trade doing basically nothing, gambling, opening orders at random, not knowing what he or she does, not knowing anything about the market. He just sees those candlesticks go up and down. Well, he will lose the money eventually. That will happen in a matter of minutes, hours, or days. Then what happens? He starts to search for books and signals from other traders. He's almost every day on the internet. He's searching for forums. He is using various systems, and he deposits his money again. But again, Holy Grail does not exist. All indicators can be profitable, but you need common sense. And he tries to trade. Then what happens? He doesn't know idea, and he doesn't know nothing about stop loss. He's very confused how his system doesn't work because price is whipsawing. He doesn't know what to do. Then he searches for another system, and yet again another system constantly. Then what happens? Well, his capital risk is at its peak because he will risk at the maximum. He will burn his account. Well, he is gonna burn his account for sure, but it just depends on the time. Whether he will burn it now or he will maybe burn it in a few days or in a month, but the capital risk is at its peak. He also ignores or trades the news blindly, again not knowing what hit him, not knowing what is happening. He really doesn't know anything. He hasn't a clue about what the news is, what NFPs, big news, red news. He's confused. Of course, he loses money every day, again burning the initial deposit. He's also sweating every time the trade is taken. That is literally sweating every time the trade is taken because he doesn't have any money to trade. And the only good thing is here the screening time, because the beginner traders cannot pass to an advanced stage without a screening time. So that is learning curve, and learning curve is individual. Someone will learn in a few, well, I cannot say few, maybe 7-8 months for the next stage. Someone will learn maybe for 6 months or a year for the next stage. But the good thing here is, again, screening time. That is literally time that takes trader to watch at the screen, to trying to comprehend what is going on. So the screen time is the major advantage for beginner traders. That is very, very hard, guys, being a beginner trader, but there is a solution, of course, and the solution is in front of you. It's called screening time. Screening time is a time that you need to watch at the charts, that you are basically you're watching at the charts. So if you watch at your charts, for example, 6 hours per day, that is called screening time. You don't need to know what is going on. Basically, it will come to you. So that is screening time. You just sit and watch and trying to think why is this, why is that, and then you search for the answers. So that is all screening time.
Very important indeed.
Yeah, very, very important for the next stage, yeah.
Could you maybe explain what screening time is a bit
Yeah.
more in detail? This is a question.
Well, I think that we have explained that. Thanks. Okay. I think that you have understood.
Okay, good. It's okay. Sorry, I missed the second comment there.
No problem.
It's clear. Great.
Yeah. So the next stage is developing trader. So basically, after we pass to the next stage, trader, now he knows something about trading. He starts to read books and it's a bit careful about the trades. What does it mean, a bit careful? Well, he started to use stop-loss orders, but of course he doesn't know what they basically mean. So what are stop orders? What is that? What we are doing here, we don't know, but we are using it. He soon realizes that demoing his account is a necessity. So, well, he starts to demo his account, he starts to grow as a trader, he starts to learn as a trader, and eventually he will learn that stop loss is, well, very important, but he still overtrades. That means he opens many trades during the day, and those trades are usually taken at random. Well, let's neglect that, no problem. He's still learning, right? He's a developing trader. Then what happens is he starts to visualize every trade before it's taken. That is a good thing. Why is that so? It's because of his screening time, right? His screening time. So after he basically learns what that demo account can be burned, he will eventually start to trade on demo account like he will use it on a real account. Then he will usually screen and watch every trade as progresses. That is called babysitting the trade. So he will babysit the trade, but that is all part of learning. He will start a hunt for self-understanding. He will learn something about his psychology. And probably after many burnt accounts, he will start with live account because he learned by using his demo tools for demo trading. He learned how he should trade live. And he starts to realize that Holy Grail lies in himself. There is no Holy Grail system. There is no perfect indicator. There is no perfect market. Holy Grail is himself. So developing trader is a learning phase. He still needs to learn to become profitable. If the trader doesn't quit, he continues to the next stage. This is a crucial time for a trader. Why I say crucial time? Because there are two possibilities. Either the trader will quit, or the second possibility is the trader will probably go to the next stage. If he quits, then he will probably never do it again, because this is a second phase, second stage. He's very interested in Forex market, but still he maybe thinks this is not for me, and then he is very close to quitting. But the good thing is, if he saw that he was profitable and that he can make money, he will probably go to the next stage. I mind you that in developing trader's phase, trader is still affected by psychology. That still means that he will overtrade, he will do revenge trades, he won't use stop loss every time, he will change from system to system, but he will try to find a good system. He will change his strategy from day trading to scalping. He's still searching for himself, but he realized that he is the Holy Grail. That
I think every win or loss has an immediate impact on the psyche.
Yes.
Yeah.
Exactly, Chris. Is whether it is a euphoria or whether it is a depression, basically is the same. Master trader, full-time trader, constant trader is basically the one who doesn't get involved into emotional side, because even euphoria is bad for a trader. Also, depression is bad for a trader. So if trader, we will see that on the next part of slides and developing stages. But you know, the peak of a trader, a full-fledged trader, is the trader who is not affected by psychology at any means. I mean, we are all human beings. We are always susceptible from time to time. But you know, the important thing is how long should we recover? That means how long should we recover from euphoria and from depression? If we are in constant pressure, that means that we are still undergoing to this some sort of this developing to develop the trader phase. So basically, this is a transition phase, and this developing trader phase lasts longest, because this is basically where you know the time has passed, but traders are not sure about themselves, and they are prone to looking for signals. They are prone to not believing their strategy, their system. They listen to others. I'm telling you again, it's okay to listen to the other guy. If he is okay with your strategy, if it goes along with your strategy, then it's okay. But you shouldn't listen to anyone except yourself if that affects your trading. If you want to pass to the next stage, you need to develop your self-esteem. So without it, you are not you are not developing the full-fledged trader.
And this is something you really can develop, I think. I think you can really focus on it by monitoring how you behave when trading and seeing if any types of emotions arise. And check your breathing. If you're breathing a bit differently than normal, that could be a sign of fear or impatience. And just by monitoring that and realizing what kind of emotions you're going through when trading, and if it reaches a level that it's undesirable, even just stopping and walking away, or physically standing up and taking 2 steps back to create distance from the screen, all these things could help to lessen those emotions when trading, because basically we don't, those emotions are unwanted, and you really want to reduce it, and you want to work on reducing that.
Yeah, that's true. Yeah, completely agree with you, Chris.
Cool.
Well, you know, next setup, next stage for a trader is part-time trader. That is good stage, because it lies in the middle of beginner trader and full-fledged trader. Part-time trader is a trader who, over time, he'll learn to specialize in one or few particular pairs. He'll trade mostly one pair if he sees it profitable. Maybe he will switch to another, mostly majors. He doesn't want to take on any risks for exotic pairs or other pairs. Well, basically, this is a trader who starts to be profitable and his losses are cut short. That means that when he loses, he will pull the trigger. He will either put a stop loss or he will stop the trade from further losses. So all the losses are cut short, but still this trader is part-time trader. Why? Because he has a daytime job. He still cannot trade full-time because he needs to, usually traders who work on their day jobs, they cannot trade full-time. So this is again a transitional phase between a final decision, whether I become a full-time trader or whether I will hold on to my day job and I will be a part-time trader. That kind of trader usually trades during the initial session, during the London session. Well, he makes maybe 1 trade per day, holding a trade for a few hours or opening trades at the top of the hour. Again, his boss wouldn't like him to see trade on the job, right? And trading is mostly done on higher time frames, simply due to a day job. But he starts to use stop losses. He starts to use heavily scaling in, scaling out. And the good thing is that the trader starts to accept losses as a natural part of the job, because losses will happen. No matter how good you are, no matter how bad we are or good we are, losses will always happen. You should always remember that, guys. Losses will happen, and that will happen mostly when we are sure that our trade will go. That, you know, that is the market. But well, he's still very pleased with his gains, but also is disappointed with losses. He still is suffering from those emotions. Where I win, where I lose, should I open a trade, should I not open a trade? Okay, let's start. Again, revenge trades are possible. They're not so exaggerated, but they're still possible. Part-time trader starts to gain money more consistently, but he still cannot use strategies due to day job obligations. He still tries to find the strategies that will give him a complete freedom over his financial freedom. So he is thinking whether should I quit my day job or should I not quit day job. This is a transition phase in that sense that the trader doesn't think about quitting Forex trading. He just thinks whether will I stay to be a part-time trader holding on to my day job, or I will quit my day job. I hate the boss. I hate to get up early. I hate obligations. I want my financial freedom. So I will use all of money I have accumulated during my career. So I will put it on Forex market. This is decision time, and this phase can last forever. But also this phase can last until the trader has gained full self-confidence that he can trade full-time. Correct lot size usually is used during part-time trading. Also, revenge trades are still possible, not so exaggerated, but still possible. Revenge trades are, well, most of us do from time to time revenge trades, but we still are, you know, we need to learn that when to stop trading. When we are done, when we are finished, so we don't take any trades. Well, yeah, as I say, part-time trader, decision, very determined to become consistent, using small risk and less profits. Also, risks are very small, but profits are also very small. So this is the job of, and this is the stage of part-time trading.
Absolutely.
Yeah.
And I have some notes that are, in a way, tied into the last two slides where I just called it intermediate, but it's definitely a good division that Tarantula has. Basically, confirming all the before. Contrary to the beginner, basically has more fear of the market now, is aware of that process, and at the beginning might doubt that process, if it's worthwhile to even go through that entire process, so has doubts. Once you move away from that and continue in that career, then it's not more a doubt of continuing or not, but indeed in which fashion, as Tarantula said. Maybe it hesitant of taking trades. Second, trading the trades, your trader or your trader self, success in general, and you know, could have fear of the market and trading. Maybe has experienced a wipeout in the meantime. Could have limited beliefs. All right, is a bit maybe more aware of that risk management that is needed, but could have very iffy money management because, for example, of that fear. So, you know, there could be lower amount of risks, but what could happen in this stage is that when a few losses have been encountered and there are now a few open trades that are in profit, instead of going for the actual take profit target that has been planned, you know, there could be a temptation there to take the profit to cover part of the loss. So what happens there is the money management is really out of whack, and you get more or less break-even situations, or maybe slight losses. So those are all indeed things we can see. Maybe, for example, another thing could be that one rebound or one wave of success after a dip has, you know, the battle has been won in a way. These types of elements. I won't dive into much of them because we've already talked. Tarantula has explained it already very well. Um, what we want to see, I think, here is in this stage, you really want to focus on controlling the psychology as we were talking about, really practicing that money management, because by this time I'm assuming that the risk management is down pat. All right, and I think that you want to slowly but surely start focusing on what you want to focus on. So no one's going to be totally ready with their view of the market and how they want to trade and their approach and their trading plan. But here you definitely want to start choosing. So you don't want to continue with that holy grail looking and checking all of the possibilities. You want to slowly but surely choose your favorite indicator or two indicators and style and time frames, and you want to start narrowing it down. It doesn't mean that you necessarily have everything exactly to the penny how you want to trade, but you want to get rid of that bouncing around mentality or method and really start making tough decisions regarding these factors, I think. Right? That would be desired behavior now I'm thinking of. So this is, prior in the beginning we said you want to do a lot of screen time, you want to treat it as a business. That's still valid here, but the emphasis of that was more on stage one. Now I'm not saying that totally disappears here in stage two. Just like risk management, they're still in the background, they're still very important, but the emphasis is now shifting from those elements that I would assume have been covered and are more understandable and have already been achieved, and now you can move on to maybe different emphases like the ones I mentioned here. So I think the next one would be we're going into the consistent trader indeed.
Yeah, consistent trading. That is the stage when part-time traders usually quit their day job and become, well, we can say full-time trader, because they are very consistent. They learn to properly manage the risk. That means that their risk won't be so big. Exactly, it will be a low risk. The profits will be low to medium, but he will be consistent. That means that he will at least be profitable 6 months in a row. So by consistency, that means that you are at least profitable by 6 months in a row. So that is a time when trader uses a proven strategy and stops searching for other different strategies. That means he maybe has one strategy that he uses, but he also uses different strategies for scalping, for swing scalps, for intraday trades. But he has a system, a trading strategy for everything. He stopped searching for other different strategies. So he knows that he's consistent with his methods, and he will try to earn profits. Well, even if it's hard to stay focused, he managed to do so by emotion control. Control of the emotions are very, very hard thing to achieve. Why? Because traders go from euphoria to depression stage, and usually trades are done by that way that, as you already know in previous examples, traders are buying always at the top and always selling the supports. So consistent trader can do that, but only on breakouts, and only he tries to sell into resistance, effectively countering the trade, and most of his trades are done, well, either trend trades or counter trend trades. Breakouts are also prominent in consistent trading, but risk is low, profits are low to medium, and his money is safe. Trader is not afraid to lose, even if there are some losing months, but trader is still not afraid to lose. He's still susceptible to human emotions, pain and euphoria. Well, not like those stages before, not like beginner traders, but still traders feel pain, and they still are susceptible from time to time to having mistakes. It doesn't mean that they're not good full-time traders, but mistakes are very, very common. even on expert level they are common, but you know, the main thing is that the account is safe. Consistent trader is very patient. Sometimes he won't trade during the day. Sometimes he won't trade during those volatile times. Sometimes he doesn't trade at all. Sometimes he takes only one trade per day. That is called patience, and consistent trader is always patient. He uses few different strategies depending on market conditions. As I already told you, there can be a few different strategies, but proven that he knows that he is consistent with it. He quits his day job and he starts to trade for a living. That is the time when, again, because he doesn't have secure money, I mean a constant money. When you work on your day job in normal countries, I mean in normal European developed countries, it's normal to get paid by the end of the month or maybe by the end of every second week. It's normal. So by trading full time and for a living, that option is gone. That option is gone because now it all depends of himself. He deposits all the money he has earned so far on Forex market, and well, again, he is not so emotional, but because of that thing, he is skeptical to emotions. So let's say that you're a guy or a girl, doesn't matter, that has a lot of money, and if you place your money and you know that you can burn 50K accounts, you won't be so emotional about your losses. But full-time trader who has given everything he has earned, he will be emotional. But that is a good thing, because he will start to take care, really take care about his money. And that is why consistent trader earns anywhere from can earn anywhere from 2 to 10% per month, because his losses are not so big, and he will always have his money to trade. So consistent trader can lose, but his money is kept safe, and that is a good thing, and that is a big thing for consistent trading. He is fully aware of strengths and weaknesses in the market and his own personal weaknesses and strengths. Thus, he doesn't gamble. He is always patient, and he can always trade even if the market is not so good, but usually consistent trader will pass that day. He won't trade even if he thinks that he can make money, but that inner self tells him that don't trade that day. That is called gut feeling. And many consistent traders have that gut feeling very developed. And that is due to their screening time. If there is no screening time, no gut feeling. And that is very simple. So, that is what I have to say about consistent trading. Chris, anything to add?
Yeah, let's see, maybe I have this prepared here. Indeed, definitely the difference here being, of course, that the traders finding more balance in all the sections that we need to become a successful trader, and it's not an easy balance. It's quite a lot of things that we have to keep an eye on, and I think that's one difference maybe with being an employee, is that the tasks probably as an employee, or that's what my experience, in my experience anyhow, probably does depend on what your job you have, but these tasks seem to be more specified or specific, and not as, I would say, as wide as this. So it does require some time to find that balance and achieve a certain level that is desirable for succeeding, right? Now in this case, the money management has improved, and as Tarantula says, it's more consistent in the methodologies that have been chosen. So there's a better psychology to trading that plan that has been stipulated and has been created, and by the increased psychology and by the fact that the trading plan, the trading strategies are clear, there's a higher chance of actually the money management goals have been reached, and that just skews all the favor, the advantages for the trader, and kind of gives that edge enough to put it in a consistent, profitable segment. All right. There's more confidence. The emotions are definitely less. Now there's still, there's maybe still some fine-tuning necessary, as Tarantula said. The trader is definitely aware of the strengths and weaknesses, but as everything, in becoming a master, there's just a lot of time involved. No matter what discipline, I've mentioned it before, really, going from the third stage to fourth is already a great step, but then from the fourth and fifth really means practicing details. If you would look at golf, maybe that last push, those last few meters that you need to put it in more perfectly, or with chess, the end game that you might need to work on a bit more. Well, in trading, that would, I think, in most cases, be probably even better psychology, in my opinion. I think that the risk and money management and the trading strategies are more clear. The screening time is obvious, but probably, I guess, the even more balanced psychology and coolness of mind state would be one of the details that could see that last development stage being reached. Not saying that probably all things could always get improvement, but that would be, I think, the #1 pick for me. But yeah, this is basically the things that the advanced, intermediate, or stage 4, as Tarantula says it, is bumping into. So these are good things. All right. I have a feeling I missed a slide here. No. Good. Here it is. Sorry. So basically, some things maybe here just to emphasize that the trading strategies are clear. So once you are trading a strategy for a longer period of time and you're getting comfortable with that, you're getting good results to that, everything is understandable, you know what to do when, you're less panicking with certain market behaviors, either because your gut understands it or your trading plan has a answer to that, or both. All right, your trading plan is solid. The levels of emotions are decreasing, and also when not decreasing. So and when not trading, sorry. So when trading and when not trading, the levels of emotions are less influential on the trading. That means when not trading, being more patient, but also when trading, being less fearful, less greedy, being a bit more humble maybe, but with a balanced respect for the market. All right, and a realistic respect, and a realistic targets. Cool mindset, looking for opportunities instead of thinking about past mistakes or past opportunities lost or past pips that have not been booked. The market has so many opportunities, has so many movements, but it doesn't mean that every single second there's an opportunity. It doesn't mean that we must or have to catch every opportunity. There are going to be tons of opportunities that we're going to miss. We have to live with that fact and not beat ourselves up every time we miss one, and start thinking about and reminiscing about those lost trades, or I mean, I should say the trades that the winning trades we didn't take, I should say, sorry, because that would really beat up the psychology. If you start thinking like that, I think it's really good to practice getting rid of those thoughts. It's not easy, but if you realize that you're actually overlooking at past opportunities, and I understand that it's always tempting to look at what has happened. I mean, we always have to look a bit in the past, of course, to derive analysis, but we should look at it with a manner of looking at the facts and trying to basically be a detective when looking at the currency instead of looking at it with jealousy. So that would be, a lot more valuable when you start to look at the market and say, okay, this move has gone down, but it's going into support. This currency is not interesting for me. I would just forget it. Or I'm actually looking for a reversal. Instead of trying to, go always thinking like, oh, I missed it. I have to catch that trade. I have to jump in. Then you jump in and you see the currency actually doing the opposite. Another thing is that the trading is approached in a different manner. It's kind of like, instead of approaching it for the must to achieve, maybe in a way in the
I think that sound is lost. Can you confirm that? I cannot hear anything. Chris, now your sound is okay, I think.
Oh, am I back?
Yeah, you're back now.
Oh, that was weird. Sorry about that. Maybe the internet got lost
think that
there.
is your net, yeah.
Yeah.
I can hear your MetaTrader in
Yeah.
the background.
That's funny. Yeah, so I'm not sure what you didn't hear. I was talking about the last about treating trading as a challenge.
Well, you can repeat that, no problem.
Okay. Well, basically, I was saying that this type of trader maybe is looking at treating trading a bit differently than purely trading and learning to trade for the pure benefit of it. And this type of trader is already kind of seeing not only the benefit side of it, but trying to kind of try to master the trading just because of the challenge itself, trying to become better at trading itself, just to become better at it, not necessarily to gain that benefit, although the benefit is always, of course, a very motivating part of it. There's more to it than that. And there's also maybe less fear, and actually the opposite. There's more of a relaxed mentality where there's a fun kind of vibe. All right, I think that this type of trader is starting to exhibit these kind of items here.
First, before we continue, I will answer the question. Hi, Nenad, you mentioned consistent traders can make 5 to 10% per month. What is your comment on the Forex Ball participants who can make 1,000% in a week? Thank you. I will say that I have saw some of them, and I have, well, I need to say that those kind of guys lose their money life. Either they lose all of their earned money on Forex Ball, or they make less profit than they make on Forex Ball. That is very true, because if you follow most profitable traders via Forex, my Forex book, or a currency, you will see that most successful traders who have been trading for a living with big money, with more than 2, 3, 5 millions, and even with really a lot of money, they make 100% at the most per year. And that means around about 8 to 10% per month. 1,000% in a week is called demo trading. Forex Ball is not real money. There was a competition. I was trying to win that competition, and a few months ago I have made, I think, 27% in 5 days. 27% in 5 days. I have never made that on live account. And just by knowing the fact that that money cannot be lost, they like to gamble. But believing in real live trading, they cannot make 100% in a week, even let alone 1,000%. So demo trading is 180% different. I cannot say 360% because 360 degrees or percent is a U-turn, a complete turn. But the opposite side is 180%. So guys, believe me, they cannot make 1000% in a month. And this is my final answer to that question, famous question, that someone is able to make 1000%. Yes, if he deposits $50 and he plays with margin, okay. But guys and traders and investors who trade with 50K, with 100K, they don't use margin. They use their profits to trade. So they are risking basically profits, not risking the equity. So for all those who think that they can make 1000% per week, I will give all of my money to the guy who can make me 1000% per week. So, you know, just think about it. Use your common sense. Be realistic. Stand firmly on the ground with your legs. Don't go in fantasies. Forex is a good job, but this is not a fantasy. We are living in a real world. So guys, spare me those kind of questions, please. 1000% in a week, okay, all of my money I will. Just give me the proof that you made 1000% in a week on a real account that is bigger than, let's say, 20K. Okay? No problem. So, let's get on to our next slide and then we can answer some more questions. Expert mentor, full-time trader. What does that mean? That means that consistent trader is, well, he has a need for money because okay, this is better formulated like this. Many guys and many traders ask me, why should anyone who is consistent trader, who is consistently profitable, why should he even try to be a mentor? Why he should sell his own systems? Why he should teach those people for the money? Well, guys, because the more money you have, the richer you become if you are consistently profitable. The simple answer, it's not the same when you trade with $1,000. It's not even the close when you're trading $100,000. Believe me, it's a completely different thing. I have traded on 150,000 sterling pound account. And needless to say, you can make in one trade with very, very, very low risk, you can make $1,000 or more. And let's say that average payment in your country is, let's say, just for the sake of explanation, $1,000. With a 100K account, you, with very, 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 very extremely low risk, you can make that with 10 pips, right? So in a matter of minutes or hours, you will earn your monthly fee, monthly payment with 100K account. When you have 10K account, well, you need to, it's not enough for a living. It's not enough for a living. So you strive to make additional money by mentoring or teaching other guys and other traders. So even if you have 20K, 50K, you know, 100K is the equity where you can start to think about, okay, I can live my life completely financial free till the end of my life, right? So, well, that is how the things are going. So don't mind us who want to teach you for the money, even though now we are doing that free, but you know, we are supported by a big company. But you know, guys, We all want to trade with more money, right? So if I make $50 on $50, it's 100% of a gain, but it's not true for big money. So experts and mentorship and mentor leveling and full time is the final stage of development of Forex trader. Mentor is aware of any price level. He is very aware of those important zones that the price may reach. He is not taken by false whipsaws. Even if he loses his money, he knows that he can make, quoted, revenge trade. But that is not revenge trade in its full sense. That is a counter trade, just reversing the trade, because he maybe is stopped out by a natural cause or by a stop loss hunt. Then he can immediately reverse the trade and be profitable. That is not achieved only by being a full-time trader. That is achieved by being by reaching mentorship level. You are fully aware what the consequences are, but you're still fully aware that you can make it up. So you can make trade by trade. So even for example, let's say today cable went from 53.70 to 53.10, and you know, guys, if I have placed, for example, I have placed my trade at 53.40, my short trade, and of course I was being stopped out, but I immediately bought the pound because I saw that that was a false break to the downside. So you see, you should buy the dips in cable. So that is, I cannot say that I may be a mentor, but yes, I am maybe a mentor. I also trade full time, but still, yet again, I have losing months. But that is normal. We will all have losing months, even when we achieve mentorship level, because there is not a guy, or okay, there is 2 or 3% of those guys, traders or girls, doesn't matter, traders, who are profitable every single month. Oh, okay, that is very hard to achieve, right? Still, the first thing in Forex is to keep your profit safe, and then the second thing is to make money. Okay, the other thing is analysis works mostly very precise, so very precise analysis, but constant analysis. I'm not saying that trader is not an expert or mentorship level when he trades or where he makes his analysis for a longer term. But doing intraday analysis is a lot harder than doing longer term analysis. It's easy to say, okay, euro will drop to 25. When will it drop to 25? Where it will go today? That is very hard. And most expert traders can do that analysis perfectly every day. Okay, every day when there is a day to trade. When there is no day to trade, they stay away from analysis, right? They are very calm and cool while trading. So even though they lose, well, they keep it cool. They are able to publish the books. Their knowledge of the Forex market is on a professional level. They can be a professors on Forex market. They're able to successfully mentor his students. Well, selling, not the snake oil, but the real thing. Able to trade hedge funds and big money. Again, trading with $50 is not the same as trading with $50,000. Emotions have been mastered. Well, we are also skeptical to emotions, but yet again, we are keeping cool. We are cool when we lose. We are not in euphoria when we win. There will be another day. We can win, we can lose. Okay, that is the market. We are having a full control under our emotions. Revenge trades are no more. Compounding is achievable only on mentorship, full-time expert level. You can achieve compounding. If you trade full-time and you withdraw the money for your living, it's well, it's a dream. It's a dream, and that dream may come true. But if you can withdraw your money and also compound your money, well, to that stage, I have not come into that stage. It's very, very, very hard to, but on this expert mentorship level, it's achievable. I know that it's achievable, but yet again, you need money to live. If you have 100K account, you can say that if you're constantly profitable, you can save your money by compounding, and you can withdraw your money for a living. Again, you need big money. For big money, you need to be big. As soon as he feels euphoric, he takes the profits. Okay, euphoria is not a good emotion. We take the profits and we close our screens. We go out with our girlfriend. We go out with our friends. We don't trade. We are not driven by euphoria. We don't overtrade. We are able to study constantly, improving market skills. We are mastering the Forex market. We are taking into account that we know a lot about market, but still we don't know his core, because market is the entity. He's utterly unpredictable sometimes. So we try to achieve that very finesse of market skill, very, very core. We are going to the core to know the market. And the last thing, the trader real-time expert mentor never says that some trade is 100% possible. You will never hear that from me, or from Chris, or from any trader who does his full-time job, that this is 100% sure trade. There is no 100% sure thing in the world. Who would guarantee you that if you go out of your apartment, a car won't hit you, or a brick won't fall to your head? Who can guarantee that? No one. So in the world that we live, there are no guarantees. You can only stack odds to your favor. So I think that we have achieved a lot by this webinar today, because most of you will recognize themselves. They will know where they stand. They will know what stage of Forex development as a trader they are. So guys, don't be honest to yourselves. Think about yourselves and yourselves only. Think about where are you now. Don't be offended if you're a novice or developing trader. We have all gone through that stage. So guys, please listen to us, and you need to think about yourself honestly, deeply, and be very, very, very confident if you want to proceed to the next level. But that confidence should be based on facts. If you can trade profitably at least 6 months, go live. Doesn't matter if you will lose sometimes when you're on your live account. The mere thing that you have traded constantly 6 months is enough for yourself to be considered a serious trader. But then yet again, you still have to learn a lot. Chris, anything to say?
No, I think it's a great observation here, and I love this slide. It was great.
Thanks, mate.
I think we can maybe take a look at a question or two we have. I think.
Mm-hmm. We can proceed. What questions?
Let me see.
You're welcome, all guys, for your sincerity, I think.
There was still a question. Yeah, sorry. There was still a question connected to the Forex ball.
I know we can answer that. We can answer.
Yeah, I know. But there was a follow-up question: if 10% a day would be kind of a more modest target.
Well, yet again, no. And by all means, no. 10% per day is a way too big target to be constantly profitable. Guys, anywhere from 2 to 10% professional trading per month is profitable. If you want to achieve 10% per day, you will burn your account in a couple of months, man, probably. That is not good money management. How can you make 10% per day if you're using good money management? You will burn it sooner or later, right?
Yep. That's what it is.
Of course.
Yeah. No problem. Let's see. Dusan is saying that he only has strategies based on fundamental analysis that work well.
Well, I don't.
consistently in the last 8 months.
No.
And
For
the well, I think it was more like a statement that he has it, I think. And the
okay,
most
that's great.
I think so. And the most important of them have limited longevity, okay? And he says he feels like I'm still at square one. Yes. That's something that we all go through indeed. And that's something, as we said, that we hope that we gave some good tips here that you can use to improve and to get to that next stage.
Well, I need to say again for that if you followed analysis from yesterday, I was placing my analysis all over the internet, the Forex Ball, of course, Admiral Markets site, and my Forex blog, and I said that euro will fall anywhere between 32.60 to 75, and today we had 32.56. That was a false breakout because that breakout maybe took some of, well, it also took me by accident. I was trying to sell it around 32.65, and well, I hadn't had the opportunity. It was a good thing that I have traded also other currencies today, but yet again you see a false breakout. We have waited for that 32.65 for all day, and the price went to 35.56. So you see, market, it respected the analysis. If globally, if I think it's okay, but yet again it failed to achieve that precise level. So that is why I'm saying markets are imperfect. And believe me, 32.65 is way more important than 32.56. So 56 is not it's not a technical level. I cannot see it on the charts as a technical level. So yet again,
I totally agree. I had the same target.
Yeah, the same target, but I lost that trade, and that was, you know, that happens from time to time. I have gone with only 15 pip stop because I have known that should be a breakout. 32.50 was retested 2 times. And then it failed to close above 32.56, and of course I lost our trade. And that is why I'm telling you, even as full-time traders, don't be I need to say quoted, don't be screwed by that. Don't be, you know, please guys, if you lose the trade, even though that you deem it that it will go in your direction, don't fear. There is another day, market is here, but don't over exaggerate. Just trade what you see. Go to other currencies, trade other currencies. So that will happen. Also the pound, you see, also the Aussie, what 200 pips today, okay, Aussie, you see, it dropped 100 pips in the last 2 hours, it dropped 200 pips in this day. So just try to observe more currency pairs. And don't be afraid if you lose. Even though you think that it will be your good trade, and it should have been your good trade, doesn't matter. Market is not perfect. So what is, no, I don't have website. I write for Admiral Markets blog. I also write for Admiral Markets Facebook, and I have Forex Factory Spiders Den. You can find my trade on Forex Factory Spiders Den.
Where is the blog on the Admiral Markets website?
Yeah, that is the blog is, well, I need to give you the link. I will.
I have the internet page right in front of me.
Yeah, I will now. We will show the blog. Just
yes.
let me find the link. Okay, just a couple of more minutes. Let's see the link. I have it here. I will copy paste it. And I will send it to all. Okay, here is my analysis, euro analysis. Okay, this set page not found. Okay, let's wait for a minute. Here is it. This is the link, and you can see it all. Okay, Chris, you can copy paste it. I think that it is.
You sent it to me somewhere?
Yes, to all audience, your entire audience. Yeah. So just click it. All right. Copy paste. And this is it. Okay, it says you're not authorized to access this page probably because you need credentials. But yet again, we can see a few of my analysis. And there is daily analysis for July 23rd. You see, I haven't done my analysis today because it was basically the same as yesterday. But you see that analysis. Well, it explains a lot. Can we zoom it in?
Maybe. Let me try.
You just click on the picture.
Somehow it doesn't work to click, but I'll do like this.
You see, 4-hour time frame, flat top ascending triangle. 32.6 is the target on breakout. Okay, 32.60, 65. But incredible, it was 32.56.
I was I was really surprised that it turned at 56. I was like, what?
Yes, I lost the trade. But, well, it happens from time to time. Fortunately enough, I managed to recover by trading Aussie and trading sterling pound. But, you know, this breakout, false breakout, caught me by surprise. Yet again, the analysis, I can say it's good because basically for the guys who have been patient and only wanted to trade short, well, congratulations. You see that this is also for July 22nd. Yet again, this is my analysis. This is chart patterns. You see. So guys, yet again,
great stuff.
Yes, you can always follow me and Chris. Chris has his live webinars. I have my constantly updating the Admiral Markets page at my Forex Factory Spiders Den. Well, we will be making a break. At least I will be going to summer holiday, but I will be back and start doing webinars and trading around 15th of August. So guys who will go to their holidays, I wish you happy holidays, hot and nice summer. If you're living somewhere by the sea, enjoy the sea. If you don't, go to the sea or enjoy the nature like Chris. Chris likes green nature, verdant plains. So I will go to the sea.
That sounds great. That must be it's going to be an awesome time you're going to have. Beautiful weather, I'm sure. So you'll enjoy it a lot. We'll be back. We won't have any webinars next week. In fact, it's good to mention we won't have any trading room sessions next week. We'll be back Tuesday, the 6th of August, and we'll have a webinar on Thursday, the 8th. It would only be me, but the 15th will be Tarantula and me again. And Tarantula, do you have your trading basics probably again the
Yes, when I get back. I think it will be on 15th of August.
The 15th, okay. And the trading basics, the 12th, that Monday, or the Monday the 19th?
Oh, I think maybe the 12th. I need to see the calendar, but it will be Monday. I think maybe it's 12th of August, yeah.
Okay. So I guess just two more questions. If pivot point analysis are good for exact targets, do you remember such concepts? I think that's...
Okay, the better, if you have confluence, the better. They are more valid if they have confluence with previous supports and resistance. I mostly do it manually, but yet again, I combine pivot points with my manual horizontal levels of support and resistance. So they're more valid if you can do it both ways, but let's say that they are valid. Most of all, Camarilla. Camarilla is my favorite pivot point indicator.
And the August trading, the last one, and then we're going to round it up for today. Yeah, the August, I would say, typically has more choppiness.
Yeah. Big bands are on holiday, traders are on holiday, and there will be some choppiness. Be prepared for that, guys.
So make sure to follow Admiral Markets on Twitter and Facebook.
Yeah. And don't forget to like us, and we wish you all good summer, nice summer holidays, and see you in a couple of weeks, guys. Take care, don't overtrade, and think about yourselves and think about your trading. It's always good to know what you do and what you shouldn't do. So I wish you everything the best.
Yes.
Bye-bye and cheers.
Have a great weekend. Cheers, everyone.
The organizer.